This episode is brought to you by LifeLock. It's Cybersecurity Awareness Month, and LifeLock has tips to protect your identity. Use strong passwords, set up multi-factor authentication, report phishing, and update the software on your devices. And for comprehensive identity protection, let LifeLock alert you to suspicious uses of your personal information. LifeLock also fixes identity theft, guaranteed or your money back. Stay smart, safe, and protected with a 30-day free trial at LifeLock.com/podcast. Terms apply.
The views expressed on this podcast are those of the participants, not of Reuters News.
So it's surprising because it's big. It's surprising because of the moment it comes in. And the answer to unlock some of those mysteries kind of lie in Saudi Arabia, really, I think.
Video games are now serious business. Loved by teenagers around the world, and now, funnily enough, the Crown Prince of Saudi Arabia, video games are at the heart of a mega buyout. Last week, Electronic Arts, the developer of sports, shooter, and life simulation games, agreed to sell itself for $55 billion to a consortium led by Saudi Arabia's public investment fund and tech buyout firm Silver Lake Partners. The numbers are huge, and they seem to run counter to the relatively subdued M&A environment we've been stuck in ever since interest rates jacked up in 2022. The price tag includes a 25% premium. The $20 billion debt package is nearly 7 times the company's EBITDA, and yet it also implies an enormous $36 billion equity check. The deal made history. It's now the world's largest buyout, finally surpassing the $45 billion takeover of US utility TXU in 2007, just before, famously, the financial crisis kicked off and seemed to snuff out a lot of these kind of big, meaty buyouts. So, what does the audacious deal tell us about animal spirits in the world of private equity? Does it make sense? Or are buyout barons repeating the mistakes of the past? All of this and more in this week's Viewsroom. It's Jonathan, and unfortunately Amy couldn't be with us this week, but you are very welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively debate about the knottiest topics in finance. Today, we're going to jump right in and introduce our guests. Liam Proud is something of a private equity guru at Breaking Views and also an associate editor in London. George Hay is our EMEA chief and also based in London. George, Liam, you are very welcome back.
Hey there, great to be here.
So, just to level set here, do you guys play video games?
I was always the friend who was invited not to play after tapping a few buttons randomly as a child, and there was so I spent a lot of time watching other people play video games as a child, but no, basically.
Got it. Classic experience. I also was possessed of friends who had PlayStation 2s, and I did not. George, I'm presuming you're in the same bucket.
Yeah, I'm not really a gamer. Super Mario 3 on the NES in the early 90s, and bit of Street Fighter in the late 90s when I was a student, but since then, not really. Anyway, we're not really marking ourselves out as
we've got a panel of absolute experts here to talk about this deal. And obviously, Liam, fundamentally, what we're looking at is just another kind of big jump in what private equity is capable of doing after years in which it seemed like the top end of ambitions had kind of been cut back. It also sort of dropped out of the blue when everybody was still sitting around and waiting, saying, when are M&A animal spirits going to kick off again? Why were people so startled by this, do you think?
Yeah, as I think you sort of hinted at, the context here makes it kind of weirder. I mean, this is really not the moment that you would have picked for the largest leverage buyout ever. I think that's kind of fair to say. We're in a moment where private equity really got itself a little bit overextended, I think, in the sort of 2021 era boom. The amount of assets they bought, they've really struggled to get rid of them. And there's been this kind of funk over the industry a little bit where people have been wondering, how can you get this cycle of selling companies in order to get money back to buy new companies? How can you get this wheel spinning again? And before we really had an answer to that question, you saw this kind of land out of the blue. So I guess the question is, how is it possible? And that's sort of something that George has looked at a lot. I mean, it's really possible because of the involvement of the Saudi Arabian state investment vehicle, the Public Investment Fund. So you've got Silver Lake, which is a big buyout shop. You've got PIF, the Public Investment Fund, which is putting up a huge amount of the money, it seems. And then you've got, Jared Kushner's the president's son-in-law, who has a shop called Affinity, who's putting up some cash as well. So it's surprising because it's big. It's surprising because of the moment it comes in. And the answer to unlock some of those mysteries kind of lie in Saudi Arabia, really, I think.
Yeah, it's interesting, George. I wanted to get your take on that part of it specifically, because when I think of how people had built their mental model of how we're going to get back to mega buyouts, there was some, I think, hesitancy or anxiety over the idea that big limited partners, so the folks who traditionally invested into buyout funds and who had increasingly been tapped for these sort of big headline co-invests. So they would put in a bunch of money outside of the fund, just straight into the deal, and they would just get sort of straightforward economics on the buyout, that they were pulling back from that a bunch of folks, in Canada and elsewhere felt that this wasn't really their area of domain expertise. And then on the other side, we had the Blackstones of the world building up these gigantic funds comprised of lots and lots of individual retail investors. And there was a feeling like that's where the muscle would come from. This is totally counter to that, right?
Yeah, well, I mean, the PIF is a kind of interesting beast. It's kind of like almost $1 trillion assets under management. But in its earlier gestations in kind of 2017, 2018, they were doing kind of what you just referred to. Like they gave, the PIF gave 45 billion, or Saudi gave $45 billion to Masayoshi Son's vision fund, his first vision fund, and they didn't get particularly great returns from that. And the whole kind of thrust of what the PIF is doing rather runs counter to what this new deal is all about. In the last certainly 3 or 4 years, you've seen the amount of their assets that are basically devoted to being invested at home rise to the current level, which is, it's over 80%. And it's there's a disconnect there, because you kind of look at PIF and assume that all it does is invest in Newcastle United Football Club or golf or just loads of things that are very kind of visible to Westerners. But what it's actually doing and what it's supposed to be doing is kind of diversifying. It's like the cockpit of the diversification of the Saudi economy. It's the thing that is supposed to kind of drive that. And what the PIF has been doing is investing in companies, startups and things like that at home in an attempt to do that. Now, the whole thing with this big deal is that it's not a kind of complete 180 on where they were, because one of the things they're trying to do at home is creating this kind of gaming industry and owning one of the world's biggest gaming companies. It's not like that runs counter to it. But what this really is the way that they're looking at this, seemingly, is they see this as a big buyout, a big deal that they're investing in, and they think they can make a decent return on it. And that is like the driving force on it. And as I say, that kind of it runs slightly counter to what you would have expected, what I would have expected them to do, especially at a time like this when oil prices aren't as high as they have been, and that's the way that Saudi gets money. So,
yeah. Just to flesh out something that you picked up on, Jonathan, on the environment for limited partners, the people who put money into private equity funds. I mean, I spoke to someone at not at Silver Lake, a different big buyout fund last week, and sort of like, did you understand that the Saudis were in the market for these kind of things? And their answer was absolutely not. Like, the message we had got from Riyadh for the last few years was like, this isn't us anymore, guys. We don't do this. We're trying to do domestic infrastructure, develop the economy, etc. We're not giving buyout barons money, whenever they like to go off and do these deals. That's not our strategic remit. So I think there are a lot of people in the private equity world that were very surprised to see that amount of money is available from PIF for this sort of thing.
Yeah, I think it speaks to, we mentioned Masayoshi Son, Egon Durbin of Silver Lake, I think goes a little more under the radar, but is basically of a similar stature when it comes to being able to pull together these heavy hitters, both on the financing side, out in kind of, sovereign wealth land, and also over on the technology side, right? He's close to Musk. He was around, when Broadcom was being built up. Like, Silver Lake helped build that into the gigantic semiconductor Goliath that is
Michael
today. Dell, of course. Can you imagine? Because I think maybe it's worth taking a step back and pointing out how crazy it is to have $36 billion implied equity check undergirding this deal. Like, can you imagine any other firm being able to pull this together?
I can't. And I mean, I think that's exactly the right thing to focus on. So just to put the numbers in context, it's the total value of the buyout, including equity and debt, is 55. Approaching 20 billion of that is debt. It's being handled by JP Morgan. They're gonna, syndicate that out, bonds, loans, etc. And then the remaining 36 billion, as you say, is equity. It's money that the actual investors are going to put in. Now, it seems like the Saudis are going to have to be good for, at least half of that, including some shares that they already own. But that still implies Silver Lake putting, kind of vast amounts of money. So to more directly answer your question, could anyone else do this? I can't think of anyone else who is quite as specialist as Egan Durban and Silver Lake in terms of tapping pools of wealth and orchestrating complex financings. And really what that makes me think is, well, what do they have planned? Because you don't tend to see Silver Lake just buy an asset and then sort of, hope that it grows slightly more than the market and maybe we can get a few margin points out of it. They're quite imaginative, right, Jonathan? I know you've spent a lot of time looking at them. So I don't know the answer, but that is a thing, right?
Yeah, because you edited me, right, on a piece where we were looking at this tiny little deal, which I think, frankly, might have been part of Silver Lake's reported souring on smaller, punchier, maybe what you would think of as more traditional tech private equity plays at Vacasa, where, again, even though it was tiny, it felt like it really was an exemplar of the Silver Lake method that you see through Dell, that you see through VMware, that you see through a bunch of these other things, even when they were taking a position in the debt of AMC Theaters, which is they build in a structural advantage to themselves that makes sure that they take a super ordinary slice of the economics from these public company deals in a way that kind of, you might argue, kind of siphons value away from kind of independent public shareholders. Although, to be fair, as Silver Lake will probably tell you, a lot of these companies, do end up back in the public markets and do pretty well, but they don't really just do these vanilla, big, concentrated, heavy buyouts without a plan. And yet, George, I know PIF owns another asset in this space, right? As far as you know, is there any plan to do something wacky here in terms of combining them, trying to drive synergies, trying to do anything like that?
Yeah, well, I mean, that's an important context to this, and certainly when this deal was announced, I thought that was just the play here, and it was the company you're talking about is Savvy Games Group. That's the kind of entity through which most of the PIF gaming stuff is directed, and they did a deal to buy this company called Scopely a couple of years ago that owns Monopoly Go, which is an extremely popular global brand that's doing very well. They've also
as in like Monopoly, the board game.
Yes, but with Go, a bit more Go. It's
with added Go.
With added Go, and they've also to kind of over-egg the Go-ness. They have also picked up Pokemon Go. So so they own all these brands. As I said earlier, they've got this kind of objective to create a gaming sector, not just like owning a whole load of cool things. They want to have a gaming sector, a thriving gaming sector based in Riyadh and based in the kingdom. And that's what they want. But oddly enough, to your point, I mean, it may be that they mesh these things together with EA at some point in the future, but certainly at the moment, it's not obvious that that's what they're planning to do, because without getting too inside PIF baseball, there's three main bits of the PIF, and there's a kind of more domestic focus bit which Savvy Games Group is in, and this deal, the EA deal, is being done by the international investments bit, which is a separate chunk. And I don't think there's immediate plans to kind of splice these things together. So it's a bit more like what the PIF is trying to do is say, okay, this is just, we've got the firepower to do this massive deal. It's vaguely kind of strategically aligned with what we want to do. And we're just hoping we get a kind of 20% IRR plus, a big private equity return on on our money, and that's the way they see this. And as we pointed out, that's quite a, it's quite a risky, ballsy move to take.
Right.
But,
Step me through that, the idea of like whether that return seems plausible, because like it's something that there may be various levers they can pull with this deal, and also Silver Lake was involved in this company Unity, which is a provider of tools for developing video games. So maybe you can begin to kind of stretch yourself to see like, oh, is this some sort of platform play, and you get vertically integrated. But they're existing in this market that already has these giant platforms for distribution that Microsoft owns or Valve owns or Epic Games owns. So it all seems a little bit complicated to me. I mean, abstracting all of that away, if you're just thinking about it by the book, you ran the numbers on whether a plausible return here gets into that kind of tasty private equity territory.
Liam and I looked at this together. Like there's the basically, as with most buyouts, you look at the revenue growth that you're expecting, or more to the point, the market is already expecting, analysts expecting, and then what EBITDA margin you think you can get to. And Liam, I mean, it kind of depends which way you look at it, but a fairly reasonable way would be to assume that it can only get to about 10%, right?
Yeah, I think we thought, if you just plugged in what the community of analysts who are like experts on this stock, they thought this thing, EA will grow by like roughly 5% a year up to 2030, and the margins, the profit margins, what they call the EBITDA margin, won't rise very much. You do that and then assume that they would be able to sell the business at the same valuation multiple at the end of those 5 years, you don't get a buyout style return. So obviously they will want to be doing more to the business than that. And that's really the question. I mean, just, if you just spend a little bit of time kind of reading through the broker research on this thing, and it does feel like one of the big questions is the growth of this thing, right? Like it's got this community, it's got this stable of titles. One called FC, which people might know better by FIFA. It's a soccer football game, easily the world's biggest soccer game. And I think there's a feeling that maybe the juice has come out of that title a little bit. The stock plunged by like an enormous amount back in January when they said that they were expecting some kind of mid-single digit decline in revenue for that franchise. There's a few others. There's like a shooting game. So there seems to be this very lively discussion in the market amongst people who watch the stock about whether or not they can really get this kind of stable of games kind of motoring again. So I think that's something that, Egan Durbin's deal makers will have to kind of figure out, really. And then any of the financial engineering stuff that you've written about, I think you've called it sharp elbows at Silver Lake in the past, Jonathan, that would, kind of come on top of that. So that's really where the juice is going to be in this situation.
Yeah, I mean, one thing I kind of add is just that, and again, this is more the Savvy Games Group end of things, but the one thing that the Saudis are very kind of big on is not just the playing of the games by individual people, but the watching of the games as well, like esports. And you have, to a degree that seems baffling to anyone of my age, it's very popular it's a big thing, a global thing for people to turn up and watch sport games being played, and like being at a football match. And they've had big events in Riyadh, and they want to kind of push that. And it may be that they can really supercharge that with this kind of deal. I'm not saying any of this stuff is impossible. It's just as Liam was saying, it's if you just look at the numbers, it's not a no-brainer. Sometimes we look at these things and they think, okay, this is obviously a really good deal and you're going to get a really good return. It's not. This one's much more kind of up in the air, I'd say.
Right. Everything left to play for, I guess you could put it.
Well,
this
indeed.
Was great. That's right. George, Liam, thank you so much for joining me on the Views Room.
Thanks. Cheers.
Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Views Room every Thursday on the Reuters app or your favorite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Views Room and let us know what you thought. We have a new email address where you can send us feedback, which is breakingviews-podcasts@tr.com. And check out our views on the biggest stories in business and finance every day on breakingviews.com and Reuters.com.